If I told you that if you bought a stock today and sold it in 2021, that I thought you'd be buying one of them for 38% off and one of them for 59% off, which one would you buy? Hey everyone, Kevin here. 2 weeks ago, a lot of us were wondering if we needed to buy a gun for the first time in our lives because we were worried about people raiding our houses and taking all of our toilet paper and Clorox. Well, today, we're just worried about why aren't stocks lower so I could keep buying stocks because I missed the bottom a few weeks ago. And I get it. So this is now leaving a lot of us wonder, well, how about them airlines and them cruise lines? I know they were toxic, but how toxic? I mean, really, how toxic are they still? Should I buy some? Come on, CCL, DAL, AAL? Come on, something's gotta have a little love left in it. LUV, see what I did there? Yeah, that's Southwest ticker symbol. So in today's video, I wanna break down my thoughts on the airlines and cruise lines. And of course, we're going to start by talking about the elephant in the room. As much as I don't want to talk about this because I'm not the kind of investor who likes to ride coattails, I would get a million comments if I did not mention Warren Buffett. Warren Buffett recently bought Delta Airlines. He bought 1 million shares of Delta Airlines at the beginning of March for around $45 per share. That increased his position in Delta to about 11.1%. And he already had about 10.4% of a stake in Southwest Airlines, which is a pretty substantial investment in each of these companies individually. And when we kind of zoom out and look at Warren Buffett's total portfolio, we see that he invests in 52 stocks. And when we sort these by his biggest holdings, we'll see that Apple is his number one position. Then you got companies like Coca-Cola, one of his longtime favorites up there. And in position number 16 and 18 are Southwest Airlines and Delta. So they're actually kind of towards the top half of his biggest stocks in his portfolio, which when I say his portfolio, it's really Berkshire Hathaway, but come on. It's Warren Buffett. But at the beginning of April, something weird happened. We all saw a bunch of news headlines that Warren Buffett had sold $314 million worth of Delta when prices were down like 50% and sold over $74 million worth of Southwest, which is just mind-blowing. Why would you sell over $400 million worth of airline shares? Well, to help answer that question, I always like to try to put things into visual perspective. I'm not the best reader compared to seeing things. So I drew this little not so perfect pie, but good enough for this video purposes. And let's say Warren Buffett owns 15 slices of airlines, like all of his over $3 billion invested into airlines is this pie. Well, he had sold 400 million, which is just about 2/15. So let's just go ahead and sell off 2 parts of the pie here. There we go. Okay, cool. So that's what Warren Buffett sold relative to his entire portfolio. That is, Warren Buffett only sold 2/15 of his airline portfolio. Well, there are really only 3 reasons we can think of as to why Warren Buffett would sell shares for basically 50% off when he just bought them around like $46, for example, for Delta, and now they're selling for $23 to $26. Well, the 3 reasons are maybe he needs cash. But wait a minute, the guy's sitting on $128 billion. So probably not that one. Maybe the airlines suck. That's possible. Or he wants to try to get his holdings to be under 10%, that is an under 10% stake in each company. Remember I said we were at like 11.1 and 10.4 at Delta and Southwest. And this trade he made accomplished that. Both of his holdings are around like 9.9 and 9.8%. That's quite possible, but why? He holds more than 10% in Bank of America. And in 2017, he said he wouldn't mind owning more than 10% in an airline. But this is the problem with looking at other investors and trying to ride coattails, is we won't know the answer until May, when he holds his annual shareholder meeting. We're all just speculating until then. We could all write our thesis in the comments below, and it is just speculation, because until he tells us, we won't know. But the problem is, if we think that we're gonna see a big bounce back in airlines and cruise lines soon, We don't want to wait till May, okay? We need some answers now. So we are stuck with our own opinion. Let's get into that. So this is where it helps to start with a blank slate. Carnival Cruise Lines is burning $16.6 million per day just to stay afloat. That, by the way, equals $500 million per month just to stay alive. Keep that number in mind. Over here, when we go look at Delta, Delta is burning $60 million, 60 per day to stay afloat. And United Airlines is burning $100 million per day just to stay afloat. I think it goes without saying that the cruise industry and the airline industry is getting spanked real hard by this panic. So isn't this going to lead these companies to bankruptcy? And what happens when a company goes bankrupt? Well, basically our stock goes to zero because usually there's more debt than there is equity left over in a bankruptcy liquidation sale. So yes, our stocks are at risk of going to zero in a bankruptcy. Well, this is unfortunately where when we start looking at SEC filings, we see reports from companies like Delta that say 80% of their flights are canceled. They're only commuting about 5% of their normal passenger volume. And if things continue this way without them cutting and firing people and doing layoffs, they will be dead by June. Which, folks, it's April 8th. June ain't that far away. And this makes a lot of sense because here on screen is Delta's year-end report for 2019, which under the consolidated balance sheet at the top, we'll see that Delta had about $2.8 billion available in cash. But unfortunately, when you're burning $60 million per day, $1.8 billion of that will be gone in 30 days, and all of it will be gone in about 45 days. If any of this makes you nervous, remember that within 5 minutes, you could get a quote for life insurance linked down below, 2 free stocks with Webull, and you could sign up for my awesome real estate courses. This unfortunate reality is where we look at Delta and go, wow, that company's going to go bankrupt. Unless, of course, they get a bailout. But the problem with a bailout is, why is it that companies like airlines can have so little cash on hand, such a small emergency fund as an airline, that they could die in 45 days? A company with over 100,000 employees can die within 45 days without revenue. It seems crazy, but then on the flip side, we think to ourselves, but wait a minute, if we made airlines have more cash on hand, and if they were not able to buy back their shares, does this mean that there would be less investments into the airlines and therefore airline ticket prices would be higher? I don't know. It's all extremely complicated and I don't know the answer, but I do and I am going to come up with a conclusion as to whether or not I would actually buy the stock myself or I'd rather buy the cruise lines. See, unfortunately, the airlines are sitting pretty knowing that $25 billion has been set aside for them in the latest stimulus package. Even though the Treasury Secretary is making them go through an application process to get the money, we all know they're gonna end up getting the money. Yeah, there are gonna be strings attached. Yeah, the airlines are probably going to be, supposed to repay this money back, whatever, appease the American people, sure, we'll believe you, Treasury Secretary, whatever. But what about the cruise lines? Are they getting bailout money too? And the answer for them is probably not. See, unfortunately for cruise lines, because of very strict labor laws in the United States that say things like, no, you're not allowed to make somebody work 4 months straight without a day off for 12 hours a day and not pay them overtime, most of these cruise lines end up registering in different countries. Carnival flies the flag of Panama. Disney Cruise Lines, an American company, Disney, flies the flag of the Bahamas, and Celebrity Cruise Lines flies the flag of Malta. AKA, these companies ain't getting money in a bailout. At least probably not, even though Carnival is headquartered in Miami. I guess that doesn't matter. And see, that's why the numbers look the way they do. With $2.8-ish billion in cash, and a burn of $60 billion per day, Delta Airlines will be gone in 40 to 45 days. Where what did Carnival do? Well, Carnival lined up and said, you know what? We're going for a rough ride, but we're not going anywhere. We're going to borrow $6 billion, which at $500 million of a burn per month means we stay afloat for another 12 months. So just by starting with this, we can see that, all right, well, Delta's probably gonna get the bailout. If they get the bailout, they'll probably be okay. Because think about this. Delta is one of the largest carriers in the United States. But what's crazy is the money probably still won't be enough, because think about this. Even if you took the 4 main airlines and gave each of them $5 billion, and the leftover $5 billion to all the smaller ones like Spirit and JetBlue and Alaska and Hawaiian Airlines, you would give Delta $5 billion. But again, they're burning 60 million a day, which this only gives you another 83 days, which the 45 they've got now, plus 83 they have later, you add that together, that's 128 days. That's not a lot of time. I mean, you're talking about 4 months, and again, Delta's knocking on the door asking for yet another bailout in 4 months. Whereas Carnival Cruise Lines just set itself up for a 12-month float. That's interesting. The problem with debt, though, is debt definitely has to be repaid. So Carnival's definitely going to have to repay their debt. And they're paying like 11.5% on $4 billion of the $6 billion they borrowed. And they're paying 5.7-ish% on some preferred debt on $2 billion, which both of those are kind of expensive forms of debt. It's not cheap money by any means. And it's yet to be determined how the bailout money is going to be required to be repaid, if the airlines actually get approved for it. Or is the Treasury Department gonna say, you know what, Delta, you die, and American Airlines, you live, because it says American, so why not? Which, I mean, that has happened before. AIG, you live, Lehman Brothers, you die. Yeah, so that could also happen, some kind of consolidation, which means bye-bye, potentially, some of your money in shares. It's scary. But let's understand debt a little bit more. And to understand debt, I like to think about myself, and I like to think of us as people. So let's say we make $70,000 a year. And after we pay taxes and our expenses and clothing and whatever, we have $10,000 left. So we could do whatever we want with this $10,000. That's the bottom line, so to speak, just usually denoted by this double line. But anyway, you got $10,000 left. Let's now say that I owed money, student loans, real estate, whatever. Let's make it very simple and say I owe $100,000. Well, if my income stays the same, it would take me 10 years to repay this $100,000 in debt. Well, I just did the same math to the airlines and to the cruise lines. And let's see what those numbers look like. The easiest way to compare these companies is just to take solid numbers that I know. 2019 net income and 2019 debts. So let's compare those. Now look, obviously revenue is gonna be lower in 2020 and probably lower in 2021, but let's just start using the 2019 data so we could all put them on a level playing field, pick our favorites, and then let's talk about what I think my favorites are actually going to be worth next year. So here are all of our ticker symbols: Royal Caribbean, Carnival Cruise Lines, Delta, this is Southwest, Spirit is Save, and American Airlines. And now let's go ahead and put net income for 2019 here, and let's see how many years it would take to pay off the debts they have. Okay, so here are the incomes. This means that Royal Caribbean Cruise Lines in 2019 made $1.7 billion net income. This is like our personal $10,000 left over. Royal Caribbean made $1.7 billion. $3 billion for Carnival. That's almost twice as much as Royal Caribbean. Delta Airlines, $4.6 billion. Southwest, $2.2. Spirit Airlines, only $355 million, so 1/3 of $1 billion. Oops, there we go, meant to write $1.2 billion for American. Now, some of y'all might be wondering where these numbers come from, and here's just a quick example. Here's Delta's 2019 statement. You can see under here, comprehensive income, $4.6 billion for 2019. Here's Carnival's, $3 billion. Here's Royal Caribbean's, 1.7, Southwest, 2.2 billion, 355 million for Spirit, and American at 1.2 billion. And for those of you who are wondering, here are the sheets that show the debts. Royal Caribbean, 17.6 billion in total debts. Carnival Cruise Lines at 23 billion plus the 6 they just borrowed, so $29 billion in debt. Delta Airlines, 29 billion in debt. Southwest Airlines, 16.1 billion in debt. Spirit, 4.8 billion in debt. And American, a shocking 41.8 billion in debt. Okay, this is the fun part. let's now say that these companies took all of their income and paid off their liabilities. This is all of their current stuff, the liabilities coming due within the next year. And this over here, the L, is the long-term plus the current, so like total debt. So nearly coming due, like kind of like credit card debt, like, oh crap, this is due like right now, and the longer term debt, like your 30-year mortgage kind of stuff, right? Let's say they took their entire income and wanted to pay off their debt. How long would it take them to pay it all off? And I wrote these things down. Royal Caribbean would need 4.6 years to pay off their current liabilities and a total of 10 years to pay off all of their liabilities. And again, the point of this is just to compare debt loads between companies because it gets a little shocking, okay? Carnival Cruise Lines would need 3.5 years to pay off their current debt, including the $6 billion that they just borrowed, or 9.6 years to pay off all of their debt. This is actually really interesting because look at this. Carnival makes almost twice as much net income, yet it would take them less time to pay off all of their debt. You'd think if they make this much more, they might be more in line with 4.6 years to pay off current liabilities and 10 years to pay off all total, but they're actually lower on both accounts. So who knows, maybe they run a cleaner ship. Now, obviously, I'm just looking at one piece of data here. Just how long, if they took all their money, would it take to pay off all their debt? I know there are a billion, bajillion other metrics. I get that. I just want to make this as simple as possible because right now, I feel like what we need to focus on is cash and debt. Those are the most important things I care about right now. By the way, if you need more entertainment, did you go down in the links below and already get your life insurance quote, your Webull free stocks, and your real estate programs? Now the airlines. Delta Airlines would need 4.39 years to pay off their current liabilities, and they would need 6.3 years to pay off all of their liabilities. That's actually pretty low. For all of their liabilities, 6.3 years, that's not bad for Delta. Maybe that's one of the reasons Warren was attracted to them. And this is why I like doing basic formulas because, you know, it kind of gives you a little bit of like a highlighter to start digging into some of these companies that stand out initially a little bit more. All right, then we got Southwest. Southwest would need about 4 years to pay off their current, 13.9 to pay off their total liabilities. Look at that, twice, more than twice what Delta needs. Spirit needs 3 years to pay off current and 13 to pay off total. And okay, this is just sad. This I just don't fully understand American Airlines. And look, everybody calculates total liabilities a little bit differently, but I calculated them the same for pretty much all these companies here. So American Airlines would need over 15, I'm just gonna say 15 plus because it's sad, over 15 years to pay off their current liabilities and over 34.2 years to pay off their total liabilities. That's insane! American Airlines got a lot of debt. So just by looking at this metric, I mean, obviously there's a lot more to look at these companies, but just looking at this silly little whiteboard here, so far the companies that stand out to me are Carnival Cruise Lines and Delta, which we know Delta is where Warren Buffett invested, and we also know that Warren Buffett invested over here at Southwest. Now, before I tell you which one I want to be buying right now, which one I want to get into deeper, let me ask you this. What do you think right now for the future of the airline industry and the cruise line industry? I'd love your comments down below, and then I'm gonna share some industry analysis with you. Because obviously, you know, I've speculated that I think business travel is going to decline dramatically after this, after people realize, wow, I really didn't have to travel that far for that business meeting. We were able to do it all over Zoom. Wow, I was able to negotiate over Zoom. Surprise, surprise. I didn't have to be staring the person down to get a deal done. That's interesting. So I do think this luxury market of travelers, basically business travelers, right? Business and first class, right? The loyalty rewards at hotels. I think we're gonna see a whole lot less business travel. And cruise lines are probably going to see less travel from elderly folks, at least initially, and I get that. So these industries are going to emerge smaller. In fact, JP Morgan estimates that the airline industry will consolidate and shrink in 2021, that is next year, and will emerge somewhere between 20 to 25% smaller. Other analysts think the airline industry is gonna shrink by 30%. And at the same time, bookings for Carnival cruises are up like 9% in 2021. So obviously, forward projections are very speculative, and looking at debt in a rough time is also partially speculative. So, all of this is just as much information gathering as we can to try to make at least a somewhat educated decision. Is always my argument, or sort of my belief when I'm looking at stocks. But let's do something fun for a moment. Let's take Carnival Cruise Lines, and let's go ahead and say that their revenue for 2019 was $3 billion, divided by 692 million shares outstanding, which basically means every single share earned $4.76 in 2019. Of course, we're not expecting to see that in 2020. But what's interesting is we can kind of use this information to see, well, right now, if the stock's trading for around $12 to $13, that means we're really only paying a price to earnings ratio of somewhere around 3 to buy into Carnival Cruise Lines based on last year's numbers, also in a fancy way called the trailing 12. Not quite the trailing 12 because we had 3 months in this year, but who cares? You're buying it for about 3 times earnings based on 2019 data. Well, 2019 had $3 billion in net income. What if in 2021 we have $2 billion in net income? That is, we've mostly recovered, we've offset losses, and we've got $2 billion left. Well, at $2 billion of revenue, we would see earnings divided by, we've got 692 million shares, we would see an earnings per share amount of $2.89. And since we're buying them at a multiple of 3 right now, that means right now, looking forward at 2021, if their net income is going to be $2 billion at 3 times earnings, the share is worth about $9 a share. But Carnival doesn't usually sell for 3 times earnings. Carnival usually sells for 10 times earnings, or at least recently before the crash had sort of declined to selling for about 10 times earnings. It used to sell for like 15 to 12 times earnings. Well, now if it sells for 10 times earnings, and earnings are $2.89, and it sells for 10 times earnings because this whole crisis is over in 2021, Carnival Cruise Lines would be selling for $28.90 in 2021, which means if you buy it today for $12, you're increasing your money about 2.5 times by 2021 if they generate a net revenue of $2 billion and the stock is valued at 10 times earnings, which as soon as the bankruptcy risk goes away, I think 10 times earnings, very reasonable. If we now fast forward and do the same math with Delta, we'll take $4.6 billion in net income in 2019, divided by shares outstanding, we get $7 in earnings per share. It's currently selling for about $23 a share, which means right now at $23 per share, we can pick up Delta for 3.2 times earnings, a multiple of 3.2. Now, if Delta's income also lost a third, like what we did with Carnival, and we divided $3 billion in net income by 653 million shares for 2021, then we would get an earnings per share of $4.59, which means at today's price per earnings ratio, with bankruptcy risk baked in, we're at $13 for the share price, which is a massive discount because in 2021, if Delta's still around, we don't think Delta's gonna go bankrupt. So that's gonna go away. Instead, we'll probably return closer to their previous price to earnings ratio, which was 8. Well, $4.59 as earnings per shares, with 33% shaved off, times 8 as a PE ratio, means that in 2021, if revenue's down 1/3, it would be realistic for the Delta stock to be trading for $36.72. And now, folks, the moment you've all been waiting for. This means that currently at today's prices on April 8th, Delta is selling for 38% off potential earnings in 2021, and Carnival Cruise Lines is selling for 59% off. This is probably because people believe that Delta is going to get a bailout and Carnival's not getting a bailout. This actually makes Carnival look kind of more attractive than Delta, unless they go bankrupt, And then
It's gone.